Welcome back to the channel, Precious Millionaire Logistics. On this channel, we share Forex education, market analysis, and ideas based on the trades we plan to take. And today we shall be sharing our analysis on EurAud. As always, advanced price action, technical analysis, supply and demand, and of course, our trick statistics approach to the markets with a profit potential of 200 pips. If you love the idea, kindly click the like button, subscribe to the channel, and turn on the notification button for regular updates. We'll be right back. Okay, welcome back. Alright, so here we have the EurAud, that's the euro against the Australian dollar, right? And we're on the weekly chart. So as always, guys, we start our analysis from the weekly chart from a swing trading perspective, guys. Okay, so right here, what we have here, first of all, we want to look for the supply and demand zones, right? So we actually get our range, right, and our focus before we start looking for other technical ideas and information off the chart. Okay, so from the weekly chart here, we can see EurAud recently made an impulsive move from this point, right, down here. But before then, on this same point, it also made an impulsive move, right, down. And we also see an impulsive, very crazy moves, right, from this point down here, right? But then this move started from here, right? So to look for supply zones, or for supply zones, guys, supply zones are denoted by what we know as either a rally base, right, drop, right, and then we look for a move back into the zone, right, for an impulsive move to the downside, or it can also be a base drop rally or a rally base rally, right? Whichever way. But for this move here, guys, what we can see from the EurAud from this point here, we can see that this is actually a rally, right, a base and a drop from the weekly chart. So we'll quickly get our supply zones, right? So from this point, this is an impulsive candle here. This is an impulsive candle, so we'll start from here, right? So yeah, this is where the supply zone is, right? Why? Because we can see right here that after this move, guys, we have the rally, right? We have the base here, that's the base candle, right? The base candlestick, and then we had a drop, right? When the price dropped here, it went back into the zone, right? It went back into the zone and then made a move to the downside. And we can see here that at this point here, we should be having a demand zone because there was also an impulsive move, right? Impulsive move to the upside. And when the price got up here, right, it came down and it's reacting to this same zone again, right? So on the lower part of it, we can connote this area here to be a demand zone, in that we have what? We have this rally down here, we have this base. You can see the accumulation here, the price accumulation on this point, and then we have the rally. So we have the rally base, right? Rally. Okay, so we have the rally, rather we have the rally, yeah, we have the drop, rather, guys. We have the drop, we have the base, and we have the rally. So when the price came back to the zone, we can see the reaction that it went upwards. So with that noted, guys, we can also spot our demand zone down here. There's the base candle, right? You can also spot our demand zone down here, right? Now let's change the color of this. I want to change the color to a green, right? The green will be fine. Okay. Alright, so within these areas, guys, we now have our range, right? This area to this area. And remember, guys, we do add a moving average here to connote as a dynamic resistance and support. So our rule or theory or school of thought for the moving average here is that when the price is actually trading above, we assume the price to be in an uptrend, right? A mid-trend, up mid-trend. But when the price is below the moving average, right, to the zone, we assume that the price is actually in a down trend or a mid-trend, a down mid-trend, guys. Okay, so on that bias, guys, we can see that whenever the price broke through the moving average, guys, it seemed to hit a resistance level, perhaps, after breaking a support level, right? The support level becomes a resistance level, and it seems to react to that zone and comes back further into the zone, right? And whenever the price from the demand zone it approaches here and it breaks above the moving average, it tends to maybe come and test the previous resistance, turn support at this time, and then move upwards, right? So, and remember, we're trading the larger time frame, so perhaps till this zone breaks, right, we'll then know further that the price is actually heading back downwards or upwards into another zone, right? Okay, like we always say, guys, the price in the market moves from zones to zones. Okay, with that established, guys, from this point, the price has been coming from a supply zone, right, from this area, right? It has been coming from this supply zone downwards, and it has broken the resistance level, or in this case, right, a support level, because the price actually got some support. If we were to zoom in, see that the price actually got some support here, and from this point when it went up, the price came here, it got some support, it reacted to this level, and then it broke down. Now, you wouldn't expect it to be differently. You wouldn't expect it to be that wide, because we're looking at the weekly chart here. So perhaps if we go lower to the daily chart, we may see some kind of price reactions here. Maybe the price going up, reacting around this area, right? Which we shall do in very few minutes, guys. So from this perspective, guys, this is what I am expecting to see. I'm expecting this price to actually by Monday or Tuesday, right, head back into this zone, right? Just tend to test the support turn resistance level at this point around here, and then find its way into the zone. So I'm expecting this price to react to this area, right? Somewhere around here, right? This is where I'm expecting this price to react. So what we want to see is something like this, right? We want to see this price by Monday get to this level first, right? Get to this level. Okay, let's use green line here. Then make a move downwards, right, into this area. So this is what we want to see, right? Now this is what we're gonna do. Gonna add this button, right? Let me use a call out. So this is an area of interest, right? We watch for a sell, right? Right, watch for a sell setup at this area here. So guys, I may be tempted, because EurAud is quite volatile, right? And on Monday I may be tempted, if I see some intraday, from the intraday perspective, if I see some bullish moves, I may buy, right? I may enter this price for a buy, for a short buy, right, and exit somewhere around here. But then my major interest, my major area of value that I'm watching is for a sell setup and around this area. And when this price approaches here, I will be concentrating on shorting the pair. So one thing I noticed, guys, maybe a little mistakes that a whole lot of us do, right, is maybe entering this market the moment the market opens, right? Remember, this is a weekend, and right now the markets are not moving. At least from the charts that we see, they are not moving, maybe, right? So we may actually on Monday morning just see the first candle, right, being a bearish candle, but that doesn't necessarily mean we should enter the market for a sell, right? Or even though we're buying and we see the market just going high, right, immediately, like at the open, mean that we'll buy, because trading sessions actually differ, right? There are different trading sections, different time zones, right? You have the Asian sessions, you have the New York, London, and all. But then when the price opens, right, when the market opens, those first price, I usually don't trade the Asian sessions, right? Because so at the opening, right, I just market like the opening of the market as a high, maybe, right, the high of the day, right, or the high of the week, whichever, or the high of the month, right? But then for every sessions, right, the most volatile sessions where the markets are active, remember we're trading the EurAud here, we're trading the EurAud, so mostly our interest should be the times when the prices are more volatile. I prefer to trade within the London session and the New York session, right? So the price movements between the London sessions and the New York sessions, right, are my area of times, my trading times, where I usually look out for my setups, and really not the Asian sessions. Why? In that, if the market is actually going right, if our sentiment, maybe the analysis is right and it's actually going bullish or bearish, right? Now, whether the Asian sessions, right, when it opens, right, whichever move it makes, if the market is going in the direction of our preferred analysis, whether bearish or bullish, even though the market, let me say, for this point now, for this case study, let me see, this market actually starts bearish, right? Now, the bearish move here doesn't mean we should enter the market for a bear, for a sell. Even though we do, guys, we have to set our stop loss above, above, to allow the move to this area, right? Why is that? Most times when the market opens like that, in that manner, most times the first money that enters the market, smart money and all that, is actually the volume money. So they leave footprints. So you just see footprints, maybe on field orders, liquidity and all that. So there's every tendency that when other sessions, right, other traders, huge money traders, wake up to actually see that market, see that liquidity here, there's every point that they will actually be waiting for price to get to that level too, that same level. So there's every tendency for smart money to actually put put some volumes here to push the price up to that same level, right, before putting the main money, the huge money, to actually go in the direction of our bias or the trend, right? So it's very imperative that we just don't rush the market at the opening, right? That's why I try to put the watch levels here, where I'm waiting for the price to get to, right, before putting my sell. However, guys, we're here to take some risk, we're here to make some money. So it's what we just show here, what I just show here, guys, is where there is a probability, a high probability of the market going. However, nothing is guaranteed in the market. That's why we have a stop loss. So we're going to set our stop loss too, guys. We're going to show you one or two things how we set our stop loss here. So but before then, guys, let's see what the daily time frame has been doing. We've not seen that. Okay, so we have here the daily time frame. As you can see on the daily time frame, guys, we still have our markups, right, still set. What we see here is price action. We can confirm a double top, right? First top here 2021, second top on the daily time frame, and you can see how the price reacted to, got up here and the price came down swiftly, right? And then the second time too, being not too long, and the price actually doing the same thing. So this is just what we want to see. You see, have our watch for sell set up here. So this is what we want to see, right? The price actually coming to this area, around this area. It could be here, within this area, right? And then we'll look for a shorting opportunity to get this little reward, right? So what should we be risking, guys? Okay, I like the idea of placing my stop loss above structures, right? So use a horizontal line again. Let me just place that, because there are some things I can't use now, right? This is what we're looking at. So our stop loss could be around here, which is okay, right? So this is what we see on the daily chart, guys, remember. So we're using this move here. We just want to see the completion, right, to the downside, and when that happens, maybe around this area, we'll then see if the price will actually break through, or the price will react again to this weekly demand zone. Okay, So let's go back to the weekly chart where everything is okay. Okay, fine. Okay, we have this here. So you see our stop loss. Now it doesn't have to be this wide, because looking at then it's about 60 pips or thereabout. It should be more, but by the time we're looking for the setups, you can very well fine-tune our entry, right? By the time we fine-tune our entry, we get the sell setup, you can maybe choose a stop loss depending on your own confirmation, you know, of the intraday time frame that you're using, right? We can fine-tune this to maybe 20, 30, 50 pips, right? And also based on your own risk tolerance for the trade, guys, right? So a sentimental bias for the EurAud pair is bearish. It's a sell, right? We're watching for a sell setup. But however, guys, like I said, because there's kind of huge movement here for the impatient ones, right? For people who actually want to take trade opportunities and trade opportunities every time, right? You can actually go for a short buy, right? Depending on where you made the market. But I am looking at this level for the price to react at this area here, at this area, for me to go short on the EurAud. So guys, with that said, guys, that's all. Let's go take some risk. Let's go make some money. Precious. Millionaire Logistics.